Hey everybody, Boris, Schlossberg, BKTraderFx, our last session of the year, and I think I've saved the best for the last because I want to show you today how to make trades that are not just good, but how to make trades that are the best possible trades given the circumstances that happen. Today I'm going to focus on reactive trades, trades that are happening in a post-news announcement melee that happens in the price action, and very often people make a critical mistake. Let's take a look at pound dollar this week, which was a currency pair I really focused on at the end of the week because UK retail sales were coming out, and I actually thought they were going to be better than expected. And although we do not anticipate trades when we do reactive trades, it's important to have a bias, and then if that bias is confirmed, then we have a really good opportunity for a trade in the pair. But one of the critical mistakes that people always make is that if news is good for UK, they simply go out there and buy pound dollar. And this is the 5-minute chart of what happens to pound dollar. It spikes up and then retraces a little bit, of course, and many people get stuck in this retrace because they try to buy the top, they put a stop somewhere around here, and they get stopped out. Much more intelligent way of looking at pound straight, because that's really what you're going to be trading, is to try to see if there's any opportunities on the crosses. And this is really where the question of what's the best possible trade really comes into play. Because my first initial impulse was to sell euro pound. Now let's see what happened the euro pound. Give me just 1 second. Alright, here's the euro pound at this time of just before they actually thought the UK number was going to be weak. They rode it up. I sell it like right around here, and within the first 5-10 minutes I'm beginning to understand that perhaps I didn't make the best possible trade because the price action really isn't going my way. And I asked myself, what's really happening? Well, European data was not bad, it was mixed that day. Pound data was good, so why am I really going short euro pound? Because the euro is not the weakest component of this pair. Instead, while in the melee of this post-price action, I'm watching myself essentially trade back and forth between small losses and small profits. I realized a much better trade would be to go long pound yen. And there's several reasons for that. Number one, yen has been weak pretty much most of the night. And then most importantly, Nikkei was up, the DAX was up, the FTSE was up, and I thought the carry might come back into vogue. So you have strong pound news, positive carry, clearly great combination for pound yen. I literally take losses in the euro pound, convert myself long into pound yen right around here, and as you can see, it just becomes a pure profitable trade for the rest of the time. So that's the lesson of the year. Don't just look for the good trade, don't just look for the most obvious trade, look for the best possible trade at that given time, and then you should be on your way to great profitability. Kathy and I wish you the best of 2008, a healthy, prosperous new year, and we'll see you then. Take care.